Hello innovators, and welcome back to another crypto outlook. Now, following on from the last video and quickly going over what was covered, we were looking for something rather specific for the monthly candle open of May, and we are seeing that right now. And judging from how people are reacting, I don't think many people watched the previous video or understood what I was saying. As always, surprise, surprise. Maybe if I had done a TikTok dance or something a bit more energetic for those with a very short attention span, it may have been more understandable. Now, we are at an incredibly vital moment in the market once again, and it's important to note before we even begin to delve into the charts and continue where we left off in the previous video, be calm, be relaxed, and do not fall victim to the social media echo chambers once again. Because may I remind you one more time, that several weeks ago, nobody was talking about an alt season. Nobody was this overwhelmingly bullish. And very few people were saying the bottom was in until the previous week especially. And if you've been paying attention to my social media channel, you would have known I said we possibly would get one decent squeeze up to here. And I even provided a very special chart on my X account using myself with handstands in candle form to illustrate a particular area which was also covered in the previous video on where we could be heading prior to any reversal. Now, it also goes without saying, being emotionally stable in these areas are very vital because you do not want to be following the herd and FOMOing into the market right now. There is going to be an overwhelming feeling like we covered in the previous video that you have missed the bottom, and I would argue that is not the case. And if you go back to most previous examples of when the market pumps aggressively, what I will say is at the very least, there is going to be a pullback and there will always be an opportunity to re-enter the market. We have seen over $1 billion in short liquidations, and this is that FOMO drive I was discussing, which would likely sway the herd in the opposing direction. Everyone believes the bottom is in. Buy, 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 long your longs. Just remember, the same people that told you we were going so much higher at $109,000 and so much lower at below $80,000 are now saying once again, we are going so much higher. Where were those people below 80K? I, for one, have not changed my bias, and I also provided a video to members around the 11th of March, which basically stated, if we do not see full targets met around that 74 to 80,000 region, we're likely going to springboard higher. I'll find a snippet of that for you guys as well.
And we can start to understand, obviously, where we are within this level. And when you're zoomed out like this, it can help you understand what's going on between the key levels that we're seeing. If I make that a line, you can now understand that if the market decides to spring up out of nowhere, we know what it's likely doing. It's a massive FOMO move. That's why I'm not concerned if this happens to take out the bearish candle, because when you see the trend line, you can understand that it's likely just liquidating shorters. And if that occurs, it's leading down here regardless into those retracements. So if we fall just short, it's just the bounce of the 50%.
Now, during these crucial moments in the market, it is down to you to control yourself and just try to minimize how much you are consuming from external sources. Because of course, a simple browse of X right now, watching any YouTube videos, you are going to be told alt season again. You're going to be told everything, and it's going to be very hard to view the market from a rational basis. Again, like covered in the previous video, we covered a huge, vast range, literally up towards the $109,000 region. We could even take out the high. We can't disregard that, but it doesn't necessarily change much here. But what I will say is everything I've been saying regarding an alt season. Look at the coins now. We haven't seen much movement yet. Not much movement whatsoever. But what we have seen is another glimmer of hope here, which should be a humble reminder at the time I made that video of why I still believe in an alt season. The market did not look anything like it currently did. And what was everyone saying? The market's oversaturated. This time's different. There won't be an alt season. Now everyone is whispering alt season once again. That should be a cause for concern. But what I do believe is this is now the confirmation breakout of the initial phases of an alt season. And similar to previous events like we saw during COVID and FTX, the market often has a breakout. This can be a very small breakout or a very large breakout, providing confirmation that the overall bigger trend on a weekly, monthly time frame is likely going to start proceeding higher. But before we get those major breakouts to the upside, the market deviates people away to believe this is the moment of truth. We then often get the pullback down. The true bottom is formed and everyone buying and longing up in this region gets liquidated. At that point, they flip bearish. The true bottom is created And pretty much the full scale of what can happen from there begins to develop and come into play. So we're going to break that down further with the usual emotional and psychological aid to help you understand what could actually be happening right now in the markets. So jumping into the charts, there's a lot I want to show you guys here. But before we do that and look at everything collectively, you will note there's a lot more levels within the chart now. And what we're essentially doing now is just creating a bit more structure to help build a better understanding of the bigger picture that I think is developing here, alongside what could be happening from pretty much the moment we are in now and from where we are right now. And to do that, we must first start off with BTC, which of course, again, if you watched the last video, from this moment, what I said was we expect a push up for the month. The key here is to understand this monthly candle closes in 20 days and 11 hours at the current time of recording. The move up you are seeing here for this month has happened in a single week. Now, notably, when aggressive moves like this come through, the opposite often happens, as we showed in previous examples. And in this very moment, what people often forget to understand is where price is again versus the size of the candle. Ignore the size, ignore the color, ignore everything, ignore the speed it's moved. Look at where it has got. And this is the most important part. Now, the range I gave in the video was from around that $95,000 to $105,000 level, which is where we assess the squeeze. Essentially, the key here again is a squeeze. The more this pushes up, the more dangerous this actually becomes. And all I have done for this video is cleaned up that region. Now we are at the upper spectrum of this area. Now, of course, in this moment in time, every single person is going ultra long. Notably, what the market has just done with this push as well is liquidated over 1 billion shorts. We have not had really a single pullback in this area. So the dominant liquidations that are now pending are of course long liquidations, and notably everyone here will be buying and going extra super longing their longs in anticipation of a breakout. Now that can happen still, we covered this in the previous video, and what I've now done instead is just map out some zones of what can happen prior to a reversal. At the moment, I think this area is going to be the reversal area, and I hope I'm correct. And that is around $101,900 to around $106,000. You want to just watch up to that area. Now, this does not factor in squeezes, which cannot always be accommodated for. And if we are to see a bigger push here to take out the high, you really want to be looking towards 112 to 115,000 for that classic 2021 situation, as you can see here. Creates a low, drives up, liquidates the high for good measure, and then hasta la vista. However, that may not be necessary here right now, and that is mostly going to depend on how we hold up on a weekly time frame. But the key first and foremost is to realize, like most wicks or most drives up to start the month, because this is the initial move up for the month, this can easily retrace in 20 days because the move up you are seeing here, which factors in the entire month of May move so far, has happened in a single week. And if we once again bring the colors back to the chart, notably it's in these vital levels that the most beautiful things can often happen. Now in this area here again, going back to the previous video, correlations, a lot of people were buying at this time, and if I quickly bring back the replay tool again, at this moment in time it was really an exact sort of correlation to what we're seeing now. People were buying in anticipation of the breakout to break the all-time high. That didn't happen. And what then happens, just to show you what is probably on the verge of happening, I believe, in this area, is a similarity to that equation. Now in this area, because the high wasn't broken, that was a stronger sign the high would get broken. And if this happens here, it's probably the same outcome. Now, if we hold and begin to hold around this territory, again, do not be deceived by bullish candles. They are deceptive and often an indication of the opposing reversal indication. The first thing you want to watch for is a weekly closure here. And from a monthly time frame, just understand if this can happen in 7 days, in 20 days time, this could pull the whole way back down. This is not the first time we have seen things like this. And if they're going to do something bad, or fundamentally, let's say the tariff negotiations don't go through, whatever they're going to potentially cook up, it never happens in the moments you believe. Now, this squeeze here is obviously now bringing people into the point of believing we are beyond the point of return. And this is good. This is what we want to see in these areas. Now, the first thing I will also say here is now that we're getting the squeeze, just simply assessing the immaturity, the childish-like comments that I'm getting on X, and even in the comments on the previous video, which I would actually encourage you to not only watch, but browse the comments to get a very good understanding of how childish people are and how immature and emotional and irrational people are. Despite the fact I said this entire range is where you really want to just factor in the higher we go, the more dangerous this becomes. And look at the responses. The problem is here, people are so confident in their own direction. And again, like I said previously, people want you to be scared to look down, consider down, and dare speak publicly that we could go down. And that's why a lot of people don't, because it farms engagement, especially now. Everyone is going to be just driving in your ear, buy. And you want to be the most emotionally calm and stable you could physically be in areas like this, because the tide could turn at the click of a finger. And if they're going to do it between here and that potential high wipe, you want to be cautious now, because if they're going to do it and they pull that trigger, people's livelihoods will be in jeopardy. Now, in the short term, I think at the very least we will get pullbacks to these two zones. And that is around 86 to 83k and around $81 to $78,000. I think we will easily get back down to that level at the very least. And it's a very high probability we will see that area revisited. And the reason being is because it's just a simple break of previous levels. You know, even in this example here, you broke up. In this case, we took out the low. In this case, we just drove back down. Key area now of support. The market would likely revisit this area before actually continuing up higher anyway. Now, to remind you of the bigger picture as well, my concepts and thoughts remain the same. I am essentially looking here for the market to pull back down between this area of around 65 to 60k, and if we're lucky, we could even get into the lower ends of the 50,000 region. Now, overall, I'm looking for pretty much 125 to 130,000 if we're lucky, and around 145 to 150,000 if we're extra lucky. All I'm simply considering is that the market can pull back down one more time beforehand, similar to what we've seen many times. Now, in these areas, the key here is if we do not take out this high and we start to drop down here, that is a stronger indication specifically that we are likely going to come up and obliterate this high later down the line. Very, very similar to this situation here. We kept driving up, teasing, just edging us blue balls all over the place that we're going to break this high. We tumbled down, liquidated, and then we obliterated. The same concept is applicable here. Now, I want another thing I covered in the previous video, which will hopefully begin to piece this together for you guys more, is to understand the placement of the total market cap in comparison to BTC. And we're going to break down BTC dominance in this video as well, alongside various other factors. Now, as you look at these regions that BTC is in, due to the fact that the dominance is significantly stronger, BTC is naturally going to be trading at somewhat of a higher structure than the total market cap. And that's another chart to get into in a moment as well. Now, notably here, something I covered again in the previous video, is we may need to drive up and take out that monthly wick over there because there was an empty void. Notably where we are right now, we are now officially coming into key retracement territory on the total market cap. And what that means is from 3.18 to 3.34, pretty much precisely where we are now, to an extra push up to around 3.42 to 3.62, you must become incredibly cautious of the fact this is nowhere near the same as BTC. So whilst BTC is giving the illusion of strength and looking like it's about to break the high, the total market cap is simply springing back to the correlated retracement level. This is not yet bullish in any way, shape or form. And how we know this is from the fact that if we go to a logarithmic chart and looking at this a bit cleaner, and again, looking at the current zone, this one's a bit bigger, 3.32 to 3.45. Look at what this is doing. And this may be the easiest way to understand what's taking place. Placing just a simple line there and looking at what the market has done. We've made a key support, we've slammed down. There was a wick here, we've now taken out that monthly wick. Look at what we've struck up to. And when I remove this, there's a little bit of a 78.6% there as well. But if you look at what this has done, the market has simply swung back up to reject this region. This can lead down to the next leg lower. Now you would have noted something in the previous video I specifically covered to help you guys stay calm in these situations. And that was Ethereum, which I have now added zones to make this more precise. There was something I said in the previous video, which was that F could either take out that monthly high in a very small way, simply liquidate, or it could push up into what was a very large zone, $2,130 to $2,550. You can see that happening right now. And what we can now do with this is change this to a more refined zone of around 2,550 to 2,700 to factor in any further foreplay within this particular level. And this is now going to become just a green zone to be a bit cleaner and break this up. Now when we go back to this total market cap chart and you understand that this represents the entire market, as this swings up to a key level, which is possibly setting up, my target is $2 trillion and ideally a bit of a breakdown lower. Breaking above also a psychological $3 trillion level. Remember, this represents everything. It doesn't matter where they are. As you can see here, the moment this bottomed, everything goes up. The moment this topped, everything goes down. Now, if the total market cap is situated now in an area which is incredibly vital and dangerous and can bring these down, what normally happens before we get that? And as this enters key resistance, and just talking general support and resistance here, as this enters this vital zone, and when I go over to a weekly time frame on this logarithmic chart, and then go ahead and show you this, up to there, what you can now see is on a logarithmic chart, which isn't precisely the same on the linear chart, but I'm going to show you a comparison anyway, and then go back to the very beginning of the video where I'm talking to the camera and show you more correlations alongside this. We have broken the complete trend from the 4th or 5th of August 2024, which is a massive uptrend. This overall tells us now the market has broken a bullish trend line and has come back to start rejecting this. Now, of course, there is open space for this thing to move higher, but as we now enter this incredibly vital retracement level, it begins to help us understand why certain coins have caught up. Because if this is going to be the turning point and begin to bring us down to the next leg lower, Ethereum needed to catch up. Litecoin, as one random example which I gave to the paid members, this was my target, 104.30 to 110. This drove up and spiked into, you guessed it again, a broken bullish trend line. It has now rejected that and could begin to roll over from here. Now, when you look at Ethereum in this level, and like I said, this is nothing crazy. In fact, this is kind of similar to the total market cap, where it has respectively just flushed out that wick. And if you were to draw a zone here as well, it's essentially a major key level with that line just illustrating that a bit further. Broken support, come back to resistance. Now, these altcoins could potentially acquire one more push to the upside. But quite frankly, with the current drive we are seeing here, this makes the market very, very vulnerable with this catch-up we've seen. Furthermore, if we go to XRP, this was another level that was being given to the paid members of Innovation Markets, and that was 2.435 to 2.5. And I was tracking this in alignment with all the other pairs, because if the total market cap, as we can see here, is now in this vital retracement level, and I will bring these all back to the monthly, and this will help illustrate this a bit further. XRP has also just taken out its monthly high, F has taken out that wick over there and come back to a major support, which is now resistance. BTC has driven up to the point it almost looks like it's about to rip to the skies. Yet the total market cap is illustrating a simple retracement is in play here, similar to these areas here. So these catching up are likely explainable by the fact they need to catch up. And you would have noted I said these trend lines were broken. It's now coming in to retest that trend line. Now XRP here is a bit more of a complex one, but what we can currently see is something that could be a sign here. It's just driven in for the third rejection with a slight liquidation. Now, notably XRP being one of the front runners of that classic cult-like behavior I often talk about, can do two things here. And we will be tracking this in correlation with everything else. If this weekly candle can close, and if we are going to see some form of pullback here on BTC, it's going to happen today. If there is to be a pullback, it will happen on Sunday. That is often the case. Drive up for the entirety of the week and start to retrace moving into the Sunday. It drives up the whole week and then drops down. Now, notably here with all of these shorts liquidated, all of this now is longs. All longs below these key swings with barely any pullbacks. Similar to this, it was easy mode, and just like now, the market is in easy mode, where everyone is once again a genius. Now, may I remind you once again, the bullish momentum and all of the bullish FOMO you're seeing from social media increased this week here. Where were those people there? The only difference is, like I said, I have not changed my bias, and like you saw in the video, this was a factored in possibility that does not change the scope. In fact, for me right now, this enhances the dangers of something that could follow. And if something is to happen, whether it's fundamental or the thing just rolls over for no reason, probably going to be Trump doing something stupid, no doubt. That starts to linger in this level. All of these people who believe the bottom is now in will not only be significantly liquidated and lose most of their money, but should we break this threshold and trickle down lower, what do you think people will do here? They will scream bear market, they will scream it's over, and they will not buy the actual bottom. Now, at the very beginning of this video, I showed a comparison to you with COVID. Now, the first thing to understand here is very similar to COVID. I'm not saying something like COVID will happen, but price structure wise, there is a key element here. This is in perfect alignment. Going over to a weekly time frame on the linear chart, we can also see where this is currently situated. It has come in to reject the broken bullish trend line. What has also happened here on BTC and the total market cap is the bearish trend line is now broken. This for me is the most vital sign we could possibly ask for. I will clean this up a bit just to place that there. Now, notably, something happens when a bearish trend line breaks. This is already our utmost confirmation that the bearish trend for this particular sequence is over. The overall trend remains completely bullish. Let me bring the shape tool back and go to a curve tool. We know we are ultra uber bullish regardless right now, but floating in this region of seemingly nowhere without a true retracement is very bloody dangerous. And what normally happens, remember, overall trend bullish. Current trend is downwards. This is a retracement right now. Nothing changes this. And this does not change the fact that if we do go lower, the overall trend remains bullish from the bigger picture. Now, when these trends break, people buy, 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 buy. They go crazy. They buy the breakout. But what then often happens is the market returns back down, just like I showed in the beginning. This is maximum FOMO territory. The market then often does something rather radical, and it comes back down to those trend lines. And when that happens, everyone that bought the breakout, which is currently the case right now, gets absolutely slaughtered. And you could see if this was to start shifting lower from the space of, let's say, next week onwards, and generally, as we know, those bullish candles dangerously near those highs can often get engulfed rapidly. And if this closes somewhat bullish like it is now, that's actually a greater danger it could slam down and reverse at the moment of, again, people thinking we're at the point of no return. You want to be very cautious of this level, but generally from here, if this maintains where it is, this is a great risk. Now, as this is all taking place and F comes in for its trend line rejection, remember there was loads of trend lines. You can really draw this in so many ways. It doesn't really matter. But the fact of the matter is, this has now struck a vital zone. If XRP closes below that weekly there at around 2.3050, that is likely an enhanced sign that this will break down. Again, I said this in the last video, but I believe this thing will come into around $1.3 at least. And what this also means is you must not panic. The key here is to never FOMO into these drives to the upside. You must instead, as always, wait for pullbacks, because over here, how many people told you we were never going below 100 again? How many people told you we will never see these prices again? And where were those people here? They convinced you again we were going so much higher here. They were silent here. And again, let's think about this. All these influencers that say we're going so much higher, are they doing what they're actually telling people they're doing? Because if that's the case, and we'll look at altcoins in a moment as well, if anyone was saying it's going so much higher here, they would barely be back at break even right now. And if any of their followers went on board with that, they will barely be breaking even here as well, because I certainly didn't see many bullish people here. And if that's the case, if everyone's almost back at break even here, and then we go back to most altcoins, well, everyone was shitting on F for weeks on end. Suddenly all you can see people talking about is Ethereum. Yet why I provided this level is because this was a logical area it could pursue, and it could even tap into 3,000 for one extra squeeze. But does that change anything in the bigger picture? In fact, look at where it's trading. People are so blinded by the candle and the size of it and where it, and you know, just people are looking at that and going, this is crazy bullish, but it's not the case. The structure is still remaining at present lower. Now, you do not want to FOMO here, and you want to instead put your focus more towards possible entry points. And I would say it's quite likely the total market cap as a key basis will get back down to 2.54 trillion at least. That will be the corresponding levels on BTC between the region of, let's say, 78,000 up to the $86,000 region, more likely the lower level. This is a little checkpoint system for you in between the targets, but I do believe these will be broken. There may be a bounce from here, but I believe this will lead down to, quite frankly, at this point, possibly 65 to 60k. Now, if you believed here 70k was possible, you should no longer change your stance because it's up here. And one thing that I'm constantly seeing here is something really bad would be required to bring this back down to there. What bad stuff happened here at 109,000 to bring this down to $74,000? It was all good stuff for that matter. It was Trump becoming president, the pro-crypto president and all of his promises. Nothing really happened here to bring that down. Tariffs, okay, here and there. Why is Bitcoin being impacted by that? Isn't this the hedge against inflation and all of the world's problems? Why did that drop? And it's interesting how quickly people's stances change. The same applies to alt season. Everyone's talking about alt season now. But the market often goes in for the initial pump prior to the actual alt season taking place. And you should very easily see F return back to 1600 to around 1374. XRP at least back down to that low. Very unlikely this thing would really do anything too crazy before coming down to the lows. Now, there is one sign that often happens that I should mention, and as these coins have started pumping, notably XRP is actually pretty quiet in this area. Just be cautious of a spike up to $3. It could happen rapidly and would probably be the final Pico top marking indication if that happened. Otherwise, the fact that this has risen so aggressively may explain why it's slowed down now, and it's remaining within this area. This is kind of similar to the broken support term resistance as Ethereum is at now. It is simply just catching up to very likely trickle down lower. And quite frankly, these two levels here need to be on your radar, specifically the $1,000 region. Now going over to the other total market cap charts here, do you see a similarity? Starting off with the others chart, a bullish broken trend was broken and has come back to be rejected. The likelihood is this will at least pull back down to these levels here. Now again, same as BTC, same as the total market cap, these have officially broken their bearish trends. But before that happens, they often pull back down. Now the safe alternative, if you want to take that risk obviously, is understanding it will likely pull back down to those lows regardless. However, I personally feel this is an indication that altcoins are currently catching up. Again, let's make sense of this. If this is to pull back down, and I will go over to the total market cap chart again, to the logarithmic chart, and replicate this. Let's just say the market is now preparing from here, which I believe is the case, to drop back down to this level. It does not make sense for altcoins to be trading where they are, down these lows. They are catching up alongside the total market cap. Because if the total market cap now drops, these should come back down to their lows. The same applies for total free, which excludes Ethereum. This means with this catch up underway, the market is simply rejecting the same levels. This could possibly squeeze up to $1 trillion, be cautious, but the same concept applies. It's around 700 billion or so. Now there is notably a trend line down below here, and I am actually looking more towards the 600 to 500 billion region. And I believe this current drive up we're seeing is the catalyst for that. This has notably also done the same thing. And that notably aligns with the bullish trend line from here. A fake potential bottom, a FOMO drive up, and a possible squeeze down to 600 to 500 billion. Going over to the total 2 chart, which corresponds with Ethereum. A broken bullish trend has just come in to be rejected. Be careful of possible spikes up. That will be the 3K region on Ethereum. But what is more notable here is the pullback area around 900 billion. That should correspond with this region here on the total market cap. More importantly, if we are to begin seeing this breakdown, which I think is exactly what could be happening from around here, give or take that possible push, should this happen, you need those altcoins not only to bring in FOMO, but to drive up to play some catch up. Because if this is broken, and like I said in the last video, I haven't changed anything, I believe this is the major catalyst to consider coming in, ideally liquidating that trend line, and that could become our actual bottom. Notably, that is also still outstanding, a clear broken trend. The market has floated away. Now, if the final bullish trend line of this rally has now been rejected and is within that official rejection zone, you are going to assume that the next bullish trend line in the sequence is going to come through, the true trend line from the furthest outer boundary. That is then the foundation to understand what this drive up could be doing. And when you look at the market from that basis, it again helps you understand that whilst this is all happening rather aggressively, it's not necessarily bullish. How can it be? How is that bullish? And if that was BTC, again, people would probably still be bullish. But that is not bullish whatsoever. And the fact we have now seen this collectively struck from 2550 is arguably one of the best signs. And I think if this weekly begins to deplete, even in the slightest form, what can often happen here as well, now this is open to interpretation, you want to leave a bit of room up to 106, but it's formed a shorting signal and another bullish candle. In 10 hours, this could possibly even get engulfed, and if that starts to happen, of course your next range is here. Now piecing this together further, and looking at this from there, we have now seen collective rejections struck across the board. So any altcoin you're looking at has theoretically caught up to likely begin to retrace down, and if not create the final leg lower. Looking at these charts collectively, it helps provide a bit of calmness in these regions, where even if there is a bigger push up to slightly more outstanding zones, it's not anything to FOMO. And if anything, if you were smart to buy any of these bottoms, this is actually a profit taking area, if you are of course in profit. And I'm going to show you some of my personal plays, not the coins, but the personal plays I've made myself with the Innovation Markets members to give you an idea of why I'm viewing the market in this way and why I do things in a certain way. Because I don't actually show my positions really anymore. I keep a lot of stuff private and I don't show my entries, but I'm going to show you guys my entries on some of my bigger coin holdings to help you understand what I'm looking for. But more importantly, there's more to this I want to show you. First of all, the CME chart. Gaps often always get filled, and there are notably loads of gaps down below. These for me right now, no concern. But even here already, there is a gap around $92,000, and to be precise, it's $91,970. Gaps will always get filled at some point. And one of the contributing factors to how I even called the 80 to 70,000 region from up here was knowing that there is quite simply a gap situated in that area. This is the same rule of thumb. When the market breaks up through that gap, I could not care less how much higher it goes because I know it's going to come back at some point. And that was probably the most simplistic way to gauge that. So as we are squeezing higher here to the point of seemingly breaking these all-time highs, there is a new gap down below, which gives us a clear guideline to the fact that $92,000 is likely on the verge of coming through. It could happen in a single day and even by the end of the week. All of these things are possible and you must be open-minded. If we see, let's just say here, I'm going to place a level as an example at $92,000. Horizontal line to 92 or 91,970, the precise CME gap. It does not precisely correlate, but just to place that there and looking at where this is now, let's say this closes somewhere like this or even bullish, like this is now in this zone. This could already be an indication that the following week could even come down aggressively and engulf this candle. It would not be the first time a bullish candle is engulfed entirely. If not, we can have some form of possible spike down, pull up, and then moving into the end of May, it starts retracing. But if I go back to the monthly time frame and you look at where that gap is, if this comes through alone, a mere $92,000, if this can go up that space in a week, can this not come back down in a singular week? And like I said, if this monthly can get below that simple high wipe of that wick, getting down to the CME gap alone would leave behind a wick, and we have 20 days to get to that level alone. That would leave behind a situation like this, or like this, or like previous examples here. And that's just the checkpoint. And the likelihood is if we get down there, we're going to break down lower, if not squeeze down even further. Looking at this here right now, that should be a bit of an eye-opener to what can plausibly happen. There is a level down below that needs to be rejected in that respect alone. Now you guys will be hearing and seeing a lot of talk of alt season. BTC dominance. Now, I have been watching and tracking this thing for months on end, if not years on end at this point, to start getting into this territory. The last real move we saw, and what I wanted, was a break of 60.35%. Once we got that, I tracked a breakout rejection from here and a continuation where at the very least I am looking towards 66%. Truthfully, I think we're going to get 68 to 70% at the very least. Now on the very first pullback we've seen, everyone has gone crazy again, talking of alt season because the dominance has dropped. I do not think this dominance is finished its upwards journey just yet, but I think we are bloody close to seeing that journey completed. Now, as we come into this short-term level of support, logically as the dominance drops, altcoins rise. That has perfectly corresponded with this total market cap surge. Remember, if this is within the territory and everything else drives up, especially Ethereum, Solana, all the favorites, nothing changes. The dominance has pulled, but as the total market cap, has driven up to retrace, the dominance has slightly dropped to retrace itself in an overall upwards trend, which means from these areas specifically, from where we've struck right now, this could be beginning its next leg higher, where I believe somewhere in this region, we will likely see the dominance surge and potentially top. Should that happen, this will likely be where the actual bottom comes through. And as you can see from that small catch up, that's allowed altcoins to elevate higher, allowing the others chart, total 3 and total 2, to play some catch up. If that begins to start reversing from this level and reverse and continue its journey higher, what do you think happens to altcoins? They will, once again, in my professional trading terminology, get brutally fisted. Specifically, with BTC being so much higher. If the dominant surges, this thing drops, all hell will likely break loose. And it is not the first time things like this have happened. Furthermore, if this happens, there is adequate room for this to go higher. I believe an alt season will likely take place in this area. And what I also believe is we can use this trend line here, which has been broken, as a foundation for where this will likely end. Going over to here with my overall targets, if I am correct, we are now in May. We are almost 50% of the way through 2025. I cannot believe I'm even saying that. But what I believe will happen, again, in what is an underlying bullish tone, is using the targets I am overall looking for, let's say around 125, 130, up into the 150 region. I believe the remaining half of the year will eventually take us up to these regions in that classic crypto way. We're moving into like October, November, December, the market forms somewhat of a top. Now, notably here, we saw similar sort of timelines where the market begins to top around November, December, October, etc. The same as over here in 2017. And due to the size of this current cycle, it's likely going to be a similar sort of window. What this also tells me is if we begin to pull back down to not just the 80k region or so, but possibly break down further, like we have done many times. Did COVID not do something similar and same as this region here in 2021? Did we not form a rather mythical bottom in 2019? Drive up, bullish candle, and kaboom, down to the lows. Now, should this happen here, this still allows the remainder of the year to rally higher, and you should be looking at the size of these moves and how quickly they happen to understand that any danger that potentially takes place from here down even to 50k, it does not mean we are bearish. And the likelihood is, should such a move come through, and remember, if they're going to do something bad, they're going to convince you the exact opposite is happening right now. This can still continue to bleed higher, I say bleed, rocket higher, for the remainder of the year. And that gives us a several month window, potentially even 6 months. Most of the major rallies that end the cycle happen in around 3 to 4 months. So even if something happens, let's say in June, you still have 6 months of the year to see a very strong recovery. It's incredible to me how quickly people's perceptions of the market change in a single candle. Everyone is just reactionary to the current movements. But we are arguably in no bullish structure whatsoever right now. But what I will say again as a reminder is when I made the why I believe in an alt season video in these areas as we were breaking down, again, that video was made because no one was talking about it. Does this not prove to you that we are likely going to get an alt season? It is evidence right here that there is enough juice in those altcoins to get elevated. But it doesn't mean it will necessarily happen right here. And in the overall bigger picture, this is not bad whatsoever. Now, the MPC argument always, well, is BTC drops from here, alts will get destroyed. Not necessarily, now they've caught up. And in fact, before most alt season, alts do get destroyed. But if you're sensible enough to understand what is possible, and you're not naive and do not just chase the candles, you would know that even if this pulls back to here, it's not a terrible buy. Will I do that myself? That's yet to be confirmed on where altcoins are. But if this happens, you also have the total market cap structure for the opposing way. Let's say here we look at this and go, well, okay, there could be a slight squeeze. Maybe it pushes up to 3.47 or BTC takes out the high. The total market cap here allows me to not be FOMOing in these situations. But simultaneously, the total market cap, looking at this just on a simple logarithmic chart, also shows me this is a key support. And the market can often return back down to those key supports before progressing higher, where the previous legs occurred. You see, like here in COVID, January 2019, the market can often come back out of nowhere after driving up higher, which I believe was also a similar situation over here. Major broken trend, market came back to reject and kaboom. That could possibly be on the verge of happening as we speak. And it's not as crazy as it seems. But what I do know is wherever altcoins are in such a situation, you should not be scared. And they made you feel scared of altcoins here. At least I was still bullish on altcoins at this point. And that's going to bring me to pretty much the final phase of this video, where I think something could be happening. Now, one of the other things to quickly mention as well is obviously something that caught my attention and concerned me. I've spent a lot of time away from X recently because everything is just negative and I don't want to see the news. But notably, Trump is literally telling people to buy stocks now. That's insane to me, as per, and as it should be for anyone, that he is even allowed to do such a thing whilst criticising Nancy Pelosi. They are the same shit, cut from the same cloth, quite frankly. Why is Nancy Pelosi allowed to insider, or not allowed to insider trade, which obviously she shouldn't be, but then why is he allowed to launch his own crypto, profit from it, pretend he knows nothing about it, while simultaneously rigging the stock market and telling people to buy now, as it's rallied for weeks on end? That is sus in itself. And notably, his son told everyone to buy Ethereum before it dropped 50%. Where were the Trumps over here telling you to buy Ethereum right now? Why did they do it pretty much at $3,000 or so? Is that not sus to anyone? And is no one questioning this? Why do people trust these individuals? They are not your friends and they are here to destroy you for their own financial gain. Now, just to give you an idea of some of my positioning and what I've been doing myself, the reason I have the ability to even call the market lower is because despite what most of these altcoins look like, I am generally in almost every single coin from the absolute pico lows. I don't really show this. I only showed this the other day because people were annoying me and I don't say much. Now, why I can afford to even look down below is because I can afford for the market to go down below. And you can see here clearly with many of my plays and many of my investments from, let's say, the lowest point possible, despite where these coins are trading, I am generally up in this particular lower buy 200%. From this buy, I'm up around 70, or call it 66, 65 to be fair. And from that buy there, I am currently up around 120%. Collectively, a decent amount. Look at these entries and understand why I am so patient and why I wait for these moments. You will notice I am not buying on these rallies. And for these particular coins, I haven't even taken profits on some of these yet because where I am looking for these things to go is remarkably higher. I am not fully deployed. And that's the key, again, to understand is I'm not sidelined. In fact, if I am horrendously wrong here and the market blows up higher, I should at least make a couple million or at least high six figures. Worst case scenario, I'm not going to complain about that. But what we must understand here is for me to fully deploy a large amount of capital, I really need to see something more aggressive. Otherwise, I will just dip in with tens of thousands in intervals, as an example. But when a lot of people say, you know, you're sidelined, you're calling for lower, I would argue I have better entries than most of the people that have a very large following. I just don't really show it. But if you want to see it, there we go. As one example, and I will also show you some other ones as well. Now here is another entry on one of the altcoins, which I do believe will possibly still pull back down as well, just like various others. But to zoom out and show you the grand picture, I have the capability to call lower. This is up 100% at the moment pretty much as well, or just under. Doesn't mean it's not going to go down. And what I understand is the best time to buy is when no one believes it's the right time to buy. I have one simple buy on this chart, and that is right there at essentially the Pico lows. Now the key to understand why I expect possibilities to go lower is because I can afford to do so. And if it does not go lower, that buy will treat me very well. And the likelihood is most of those entries I'm showing will do 1,000%. Even if I invest 10 grand into something here and it goes up 1,000% because of where I've bought, I will make 100 grand. That is not something I will complain about. But you must understand where most people are situated and what you hear, the opinions you hear. The reason people do not factor these things in is because of where their buys are. And I actually challenge a lot of those influencers or anyone here that comments on my stuff to show me entries like this without a lot of chaos on the charts. I'll show you some non-favorable ones as well, but I'll show you another one. Now let's use this example where I actually took a bit of profit off the table, which was some of the initial investment at around what I believe was the 200% mark over here, around 200%. Now put that in perspective, this was a point in time where most people were buying this thing and every other altcoin in November. I had the affordability and freedom to get the hell out because of where I bought, which was again essentially the Pico lows. Now although I can DCA in, because I'm in so low from most coins, I really have that freedom to just sit on my hands and wait. But most people cannot do that because their buys are up there. And if you look at that inauguration window, and why I wanted to show this is to put in perspective, you know those influencers that were telling you so much higher here and alt season was beginning here? I was chilled at this point because I knew even if it drives up, it's likely going to pull back down. I still think all of these will go lower. But the point here is most were buying at this level. So if those influencers were telling the truth, they would likely still be in a loss because not only are these altcoins down, anywhere from 70 to 90% from all-time highs. But even from those November pumps, from the top of those pumps to here, they are down on average 60 and were down around 70%. So are these people even telling the truth? Who is even in profit right now? And I've managed to weather a lot of this by just, number one, again, having capital on the side for the right moments. But we cannot get excited here. And I am not looking for small moves. The difference is people are getting excited over this. And whilst I'm in profit, I think the best is yet to come. I've been positioning myself since 2023 on these coins. And I could have easily just scaled in. But there's a time and place. And that singular entry there alone has allowed me the freedom to sit back and wait. Now I'm going to show you some of my less favourable entries. Let's say over here, not everything is perfect. Again, I've even got some coins that haven't worked out, by the way. I'm not going to lie to you and say they all are absolutely perfect. I'm an honest person. And I have some coins that have failed. They didn't succeed. High risk coins, low market cap, put like 5, 10k in, didn't work out. Let's say 1% of my portfolio value, couldn't care less. Not many people are going to tell you that. I have some coins that are in drawdown. Not the end of the world. But generally, a lot of my entries are in very favourable levels. We can see this one was not really the best, so I just bought a bit more lower on the recent drops. I'm yet to add more volume to these, and again, these pumps up here, a singular move like that has brought me into profit. So you must please understand this comes from a basis and a person who's number one, very honest to you, but number two, is already in fact, from very, very good prices. I just need something bad to happen to fully deploy that capital in. It's really that simple. And obviously it makes sense. I completely forgot to even show this. Like, I'm calling for lower. I'm saying this stuff. Of course everyone's going to say I'm sidelined. I'm not showing that I probably have better entries than most of these people. And that's because I sit on my hands and I embed my arse cheeks into my chair until the right moment comes. And if more people could practice patience, they would be able to have entries like this. It is down to patience, and this is everything I teach in the app. Whether people choose to listen or not is down to them. But this is shown in the app. This is public. Everything I do is live and transparent. I do not hide stuff. Now, let's go over to maybe another example. Now here's an example of a coin where, in the grand scheme of things, don't get me wrong, it's not terrible. I mean, compared to where these things were trading, look at these entries. You will notice here there's dots, cells. What I've done with these is also something that most people do not do. I made 2 entries here, 74 and 63 cents. The market went lower. Didn't buy any more of this one. I didn't really want to, but if it does drop, I'll buy more. Now you will note here, instead of holding on and trying to be a hero, when the market pumps up, I get the hell out. When the market pumps up again, I got the hell out. And I retrace those bad entries and put the capital back into my hands. What most people do instead is make very bad entries and buy more where those sells are. That's what most people do. They continuously add to these positions. So when people tell you we're not going lower, that's because they're buying these candles and cannot physically afford for these coins to go lower. And that's what creates the bottom. And if my buys and sells were reversed on most of these charts, which I guarantee you, if you look at most people's charts, where my buys are in these regions are where most people are selling. And if you buy up in these areas, you are more inclined, because if you're doing that in the first place, you generally believe and genuinely believe the market's not going down again. Otherwise, you would not be psychopathic enough to buy at those prices. But this is what it all stems down to. With the correct positioning, you have the affordability to weather drawdown. And while some of these, as an example, this would be in a bit worse of a drawdown if I didn't get out and cut those entries off. I cut those losers where required. And there's other coins. Today, one coin just jumps 220%. I'm not even taking profits on that yet because I bought so low. That's the crazy part. Because my entries are so low, it seems like a huge amount, but it's not, because if we're going to see an alt season, let's say this entry here, that could become 1,000% at that price point. But most people buy up here. Now, as an example, with this entry here, for me to make 1,000%, this coin needs to go to $3, which obviously, as we've seen historically, looks pretty damn plausible. Look at what happens to 1,000% as you shift this higher. Let's say we go to my next buy. This now needs to go up to $5.5 to make 1,000%. And quite frankly, that's still pretty good in all fairness. But look what happens when you start to shift this up to that bullish candle there. You don't even make half of this going back to all-time highs. But when you position yourself in these regions, you are able to achieve remarkable sums and remarkable returns on investment. But that simply comes down to, again, having the patience to buy at the correct time and place. So I can look at this and go, well, hold on a minute. Even though I'm in a decent profit, this isn't exactly anything crazy. In fact, if this drops down, most people will sell again. I will just buy more at the correct time and place. And even recently on those dips, I bought a little bit as a protection mechanism. But in the grand scheme of things, when entries are this low, there is no necessity to sell. And for most people, it's a game of not understanding this time is different in the respect that it's taking a lot longer than we anticipate. But if you want to make those crazy returns, you need to ensure your entries are as damn low as possible. And you're not going to do that by FOMOing or buying into bullish candles. So to answer the question of, am I sidelined or I'm still waiting, I challenge a lot of people to show me buys like this and show me their positioning, and I guarantee you they won't be the same. So I'm pretty good regardless, and I want to make that very clear. In the event I am wrong here, the outcome, again, which most people don't like me saying, is I make a lot of money. Will I make as much as I could do if I go all in? No, of course not. But there is a time and place to go all in, and I think that could be coming. I just need to see something a little bit worse to justify doing so. But if a couple $100,000 on the upper end of 6 figures to low to midpoint of 7 figures is attainable from what I've done so far, I'm not going to complain. But if we get a crash, and this is all the build up for that, and even looking at this chart, just like key support and resistance in this level, the market's just driving up. So if BTC drops and these come back down to the lows, if not lower, Is that not the sign in itself? Look here historically. Market drives up. Oh my God, we're going to fly. Crashes down again, goes up, crashes down again, pumps up, crashes down again, pumps up further, crashes down again. It is a never-ending cycle of essentially liquidations from longs and shorts. The most frequent and most recent is currently a bunch of short liquidations. So now that shorters are out of the market, there's a higher probability the market will pursue those longs just like it has here. And what I essentially think is the illusion of a bottom is being printed right now. Because it's not, I bought a bit of security, but truthfully, the bottoms are in there. So I really would like to get in further around the same Pico lows I've bought in, if not lower. I generally prefer and look to, on average, DCA lower. That for me is way more favourable. And hopefully, that should be right around the corner. Fingers crossed. I hope you've enjoyed this video.